These are the two reasons why you don't see that many homes on the market right now. The market has shifted totally. People are talking about a crash, a housing crash. I can assure you that's not going to happen. My name is Wayne Turner. I've been brokering the sale of real estate for 28 years. And I want to explain something to you really quick about the housing market. You don't see a whole lot of inventory right now because the interest rates have increased dramatically. Everyone's noticed that. So you're at a 7% fixed rate. Now, if you're a first-time home buyer or any buyer, you got to consider this if you're renting. If you're renting, you're paying 100%. Think about that. So if you go purchase something and you have to pay 7% fixed for 30 years, well, you're doing 93% better than paying rent. But if you own a home, this is so important to know. If you own a home and you have a mortgage, and that is actually 60% of people have a 4% or lower fixed mortgage rate. 60% of homeowners have a 4% or lower fixed mortgage. So what happens now is, why would you sell your house if you've got to go get a 7%? I mean, that's a hard pill to swallow. And it's not so much the difference between the 4 and the 7, it's the difference between a 4% fixed rate on a $400,000 house as opposed to a 7% is well in excess of $1,000 a month. But this is what people need to know. If you're going to sell your house, your loan is assumable. The buyer has to qualify, but your loan is assumable. Listen, you won't hear much of this because 95% of real estate agents aren't aware of this because most of them haven't been in the business for nearly 3 decades like myself to know and be familiar and have experienced that. So that's what we're going to see. We're going to see a shift in the housing market, and it's from basically people understanding that, oh, wait a minute, I can actually sell my property to someone. Or, for example, your house has been on the market and your house hasn't sold. It's important to know that the buyer can assume your loan. Now, the way they assume your loan is they have to qualify. So it is a qualifying assumption loan. They have to qualify for what you're paying, basically, on a monthly basis. Their qualification is going to be based on what their income is, right? But it's also based on what that fixed rate is. And that fixed rate and that payment based on the balance that you owe as the homeowner. Now, you're probably thinking to yourself, well, wait a minute, if I owe 3, but I'm selling it for 4, where's the other 100,000 going to come from? Well, it's got to come from the buyer. The buyer has to make up the difference in cash, equity, or they could get a second mortgage on the property. See, they can close, and the day that you close, you can get a first and a second mortgage on the property. Buyers aren't aware of this. Sellers aren't aware of this. And most real estate agents aren't aware of how this can work. This can happen. It's an assumable loan based on your debt to income ratio, how much debt you have, whether or not you can qualify. So now think about this. You're out there, you have a fixed rate mortgage, it's 4%, and you're thinking, you know what, we do need a bigger house. We're outgrowing it. I'm working from home now. I need a home office. Whatever the circumstance and situation may be, you have to know, and all homeowners need to know, that if you are going to put your house on the market, you need to market that rate. You need to market. You need to make sure that your agent that you hire knows how to market and promote and advertise that property to let the prospective buyer know this is what their payment could be and that it is an assumable loan. Because you just will open up the doors like that to so many more potential home buyers. And you may say, well, wait, where are people going to get $100,000 or $150,000? It's real simple. They have a home to sell just like you. And their home can be sold because their rate can also be assumed. And listen, when it's assumed, your name does not stay on the deed, the title, or the loan. They have to assume, they meaning the buyers, have to assume your interest rate. They have to qualify. The mortgage goes from your name to their name. And so you see how this creates a whole paradigm shift of the housing market. Just because a homeowner is informed, and that's why I'm putting these videos out there, because it's so important, because people are like, Wayne, I want to move, but golly, I can't afford that. Or I want to move. Well, what if you could afford it? Because you're not taking $100,000 from the sale of your property and putting it down on another property, of which you're going to have a 7% fixed rate. You can actually do that and assume that person's loan. And they may have a 2.9% rate, or 2.5%, or 3%, or 3.5%, or a 4%. It's so important to know this. 99% of loans that were given in the last 30 years are assumable. Qualifying assumable loans. If you need to know more information, go to contactwayne.com. Wherever you are, I've got a network of 90,000 agents around the country that are familiar and know this process. Wherever you are, it doesn't matter the city or the state or the county or the parish. I have an agent just like myself that can sell your property. And I tell people, if you can hear my voice and you can see this video, me and my team can sell your house.